If you're a Canadian who's relatively new to investing, the question that inevitably comes up is, should I invest through a TFSA or an RRSP? And the answer is, it depends, because of course it does. Especially if you're planning on buying your first home anytime in the future. Hi everyone, I'm Marcus Rogers with Learn Wealth, where it is my mission to teach you about personal finance and investing. And if you're new to this channel and want to follow along on the journey or want to learn more about personal finance and investing, please consider subscribing. Hit the button below. Before we get started in this video, I want to give a shout out to Frank Sutton. You suggested this video in the comments on my last video. Thank you very much. And if anyone else is watching, you want to see me cover something in personal finance and investing, comment it below and I'll do my best to make a good video on it. Now let's get into it. Is it better to invest with a TFSA or an RRSP? I'm going to go through the pros and cons of both and identify the different situations where it's better to have one or the other, especially if you're planning on buying a home. But right off the top, I want to say, honestly, either one is great. And the fact that you're even watching this video, learning about investing, saving to invest, or investing in one of these vehicles, that's a win right away. And just keep on investing. It's a long-term game. I'm not a financial professional, but I do have some good ideas on which one you should be picking depending on what stage of your life you're in or what your financial goals are. There are three major distinctions that I'm going to talk about between the TFSA and the RRSP. And right off the top, let's just define what TFSA is, or a tax-free savings account. And honestly, the name can be a little bit misleading. The absolute worst thing that you can do with the TFSA is use it as a savings account and just put cash in it and leave it there as cash. You're not going to get the benefits of the tax-free savings account. Now, the real benefit of it is also in the name, and that is the tax-free. The tax-free applies to gains that you make on those investments. And those investments could be stocks, bonds, mutual funds, ETFs. You can do it self-directed and buy your own. You can be advised by a professional. In any case, the TFSA, you consider it more of a basket or an investment vehicle, and it just really holds those investments, whatever those financial assets are, the TFSA holds them within it. I think the reason that there's a bit of a misconception in the savings aspect of it is because unlike an RRSP that is really focused on retirement, the TFSA is a little bit more broad, and that's one of its huge benefits that we'll talk about is its flexibility. But first, difference number one that I would like to talk about is how this investment vehicle is taxed. Now, you contribute money to your TFSA that is already been taxed. So you made some money in the year and then your income tax comes out, you put it into your TFSA, and then you can buy stocks, bonds, whatever. So I'd like to do an example where if we look at, you put $1,000 into your TFSA 5 years ago, and let's say 5 years ago you bought $1,000 worth of Amazon stock. In that last 5 years, Amazon stock has appreciated about 540% or about 5.4 times. So if you went to sell today, you would be looking at those shares being worth about $5,400. Now, when you sell those, you don't actually get taxed on those gains. That $4,400 of gains, you would not be taxed on. That is the tax-free aspect of the TFSA. Now, the second difference, it has to do with contribution, how much you can actually put into a TFSA. And it's varied a bit over the years since its inception in 2009. This year, you can contribute $6,000 to the TFSA. Now, if you have not contributed before, that is actually cumulative. So the average since 2009 has been $5,800 that you can contribute to the TFSA. And I'll put the exact details year by year in the show notes in the description below. The third difference between the TFSA and RRSP is what I'll call flexibility and a couple important ages. So by and large, the TFSA is more flexible than the RRSP. And that's because you're allowed to withdraw the money whenever you want, frankly. So if you're using the TFSA to save up for a car or a second home, anything really, a vacation, you can take that money out and there is no penalty. You get the money. The only caveat to that is that you won't be able to contribute that amount of money until the following year. When it comes to ages with the TFSA, it's pretty straightforward. You have to be 18 to open one, and that's about it. Now, the RRSP, or Registered Retirement Savings Plan, is older than the TFSA. It came about in 1957, and it's kind of the same idea. You got it. It's a investment vehicle, but it is specifically geared towards retirement, and there are certain penalties that come about if you do withdraw before retirement, with one exception. We'll get to that exception in a minute, but first let's look at the three key differences that we already looked at for the TFSA. So the first one is tax. Now, RRSPs are kind of the opposite of TFSAs when it comes to tax. You're actually using pre-tax money to contribute to your RRSPs. So this will actually be deducted from your income tax, and there's certain strategies or times in your life that would be extremely beneficial. A simple example of how the tax works is that, let's say you made $70K and you contribute $10,000 to your RRSPs. Well, that's actually going to take that $10,000 off your taxable income at the end of the year when you go to do your taxes. And you will only be taxed on $60,000 of income instead of 70. But the single most important thing to remember with the RRSP is that you do have to pay taxes on the gains later down the road when you pull those out in retirement. And do not, I repeat, do not take money out of your RRSP unless you really need it before retirement, because you'll be hit with what's called a withholding tax, and that money will be added to your taxable income for the year. I'm not going to get into the specifics of the withholding tax, but basically the more you take out, the more you get taxed. Difference number two, the contribution limit. Unlike the TFSA, where it's $6,000 per year and that applies to everyone, the RRSP contribution limit is actually based on how much you make, and you're allowed to contribute up to 18% of how much you make, up to a maximum of $27,830. So when you're making about $154,000, $155,000, you're actually going to hit that maximum. Difference number three, flexibility and age. The RRSP is a lot less flexible than the TFSA. And this is because it's really geared towards retirement. So as I kind of mentioned earlier, you're going to get hit with that withholding tax if you withdraw some of your money from your RRSP before you are retired. Additionally, the age is a little bit more flexible though. Instead of having to be 18 like a TFSA, you can open an RRSP as soon as you're making income. If you're working at 15, then you can be contributing up to 18% of your income to the RRSP. Now on the back end, you have to actually cash out all of your RRSP money by the end of the calendar year when you turn 71. Now, number four, the thing that I've kind of been alluding to if you're going to be buying a house, specifically if you're a first-time home buyer. There are some massive benefits with the RRSP. So that is that you can use up to $35,000 of your RRSPs, so that's tax-free money, to use as your down payment on your first home. You have to be a first-time home buyer. And now that's not exactly just free money. You've contributed it, and you do have to pay it back into your RRSPs, but you have 15 years to do that. So I actually think this is an incredible benefit if you're saving up, you're trying to buy that first home. So there's lots more differences between TFSA and RRSP that I didn't really cover, but I thought those were three major things that you should know about. The tax implications: TFSA is post-tax money and RRSP is pre-tax money. No tax on the gains of TFSA because you've already paid it in a sense, and you do pay tax on the gains from an RRSP. And don't forget about that withholding tax. Number 2, contribution limit. TFSA is $6,000 this year. RRSP is 18% of your income, up to $27,830. And number 3, flexibility in age. TFSA is a little more flexible in that you can withdraw from it whenever you want. And RRSP is less flexible. You have to either be buying your first home or retiring. On the age side, no age to open your RRSP, just be making income. TFSA, you have to be 18, but you can hold forever. Whereas you have to cash out your RRSPs when you're 71. So what should I do? That's a lot of good information, but what should you do? Really depends on your life situation and what your financial goals are. But I can say personally that I have been investing in my TFSA. I'm seeing some nice growth there that I'm really happy with. But now buying a home is on my radar in the next few years. So I'm going to start contributing to my RRSPs and be able to use that pre-tax money for a down payment on my first home. And to sum it all up for you, you should invest in an RRSP if you are under 18. If you're in a high income bracket and you want to reduce your taxes this year. If your employer does RRSP matching, you should absolutely take advantage of that. It's basically free money. If you're planning on buying a home in the next few years, RRSP is probably for you. You should use a TFSA if you might need this money before retirement, other than buying a first house. So if you're saving up for a car, if you're saving up for a vacation, something like that, where you're making some investments, but you're going to be pulling it out before retirement, you should use the TFSA. Also, if you just want to get started in the simplest way possible, I would recommend TFSA. It's really easy to start. Just talk to your bank and they will be more than happy to start that for you. I really hope that this was some useful information for you and it can help you to make some of your own decisions in your investing life. If you felt that you got some value out of it, please give it a thumbs up. If there's something that you want to see covered or more information on something, a part you really liked, leave a comment below. If you want to see more videos like this, please support the channel and support your learning by subscribing. Hit the button down below. Thank you for watching. I really appreciate it if you made it this far. And just remember, have a nice day and keep learning.